Hello students, welcome to all of you Shiksha 360 JAP classes. Today we have to discuss the chapter number 32 part 2 regarding the contract costing. Clear? So in this session we have to discuss in detail regarding the contract costing. So now let's start our discussion. What is contract costing here? So contract costing, what is that contract costing? It is a form of the job costing. Clear? It is a part, we can say that, or it is a form of the job costing applied to a relatively larger jobs which take a considerable time to complete. Clear? So contract costing basically where it is applicable, that is, it is a form of the job costing applied to a relatively larger jobs which take a considerable time to complete, that is normally above the 1 year. Like in the job costing, in the contract costing also, each contract it is treated as a cost unit and its cost are to be separately ascertained. Clear? So like in the job costing, here in the contract costing also, each contract it is to be treated as a cost unit and its cost are to be separately ascertained. Examples. Examples where contract costing it is suitable include shipbuilding. Clear? So examples where contract costing is suitable include shipbuilding. Second one, engineering projects. Third one, construction contracts. Fourth one, infrastructure projects, etc. In some industries and government contracting. Clear? So in some industries and government contracting, contract costing it is a primary task. Clear? So in some industries and government contracting, contract costing basically it is a primary task of the accounting department. Proper contract costing it is crucial to earn adequate. Clear? So please remember that where it is to be used. Clear? Contract costing, that is basically where the work it is of more than 1 year. Okay, like shipbuilding, infrastructure projects, engineering projects, construction contracts. Okay. So further, that is proper contract costing. Basically, it is crucial to earn adequate profits. And so it is usually staffed with the experienced accountants. Clear? So it is usually staffed with the experienced accountants. Clear? So this is the basic of the contract costing. Just remember that basically it is a form of the job costing applied to relatively larger jobs, which take a considerable time to complete. Clear? Which take a considerable time to complete that work. Okay, now further. What are the features of the contract costing? Clear? So next point which we have to cover here, that is what are the features of the contract costing. So the important features of the contract costing are as under. First one, under the contract costing, a separate contract account it is maintained for each contract. Clear? So under the contract costing, a separate account, a separate contract account basically it is maintained for each of the contract. All the direct costs related to the execution of the contract are allocated to the contract. Clear? That is all the direct cost basically related to the execution, that is for the performing the contract or for doing the work. Clear? So all the direct costs related to the execution of contract are allocated to the contract. Third one, the overheads for a contract are allocated in the same way as under the job costing. Clear? The overheads of for a contract are allocated in the same way as under the job costing. Clear? That is the extra expenses. A contract usually involves a lower amount of overhead, but these require appropriate allocation. Clear? So a contract basically usually involves a lower amount of the overheads, but these require appropriate allocation. Next one, that is work in progress. It is an important aspect in the contract costing. Clear? Because why it is important, that is WIP. Work in progress. Clear? Because it takes a longer time to complete the job. Clear? Or to complete the work. Clear? So regular payment it is to be made under that. Clear? So regular payment it is to be made under that. Clear? Like that up to this much work, this much payment it is to be made. Clear? So in this way they have to specify all the details. Clear? That is the same thing they are saying there. Here that is work in progress. Basically it is an important aspect. Clear? Work in progress basically it is an important aspect in the contract costing. Clear? In the contract costing here. So now we have to discuss what are the difference between the job and the contract costing. Clear? What is the distinction between the job and the contract costing here? Even though contract costing, clear? Even though basically contract costing, it is a form of the job costing only, clear? So even though contract costing here, that is, it is a form of the job costing only. So there are some distinguishing features as mentioned below. Clear? So there are some distinguishing features that are to be mentioned below. First one, that is the work is usually carried out at a site. Clear? So the work is usually carried out, that is in the contract costing, clear, at a specific place, clear, where you are like building the infrastructure project, or we can say that a bridge or all other thing, clear. So the contract or work is usually carried out at a site different from the contractor's workplace in a contract. In execution of a job, the job is usually carried out at the contractor's workplace, clear. So job basically where it is to be done at the contractor's workplace, and contract basically it is usually carried out basically at a site. Okay, so please remember this point. Clear? So contract is usually carried out at a site, and job basically it is usually carried out at a contractor's workplace. Second one, a contract and a job are differentiated on the basis of the size and time taken also. Clear? And time taken also. Clear? So how we are differentiating both costing, that is a contract and a job costing basically are differentiated on the basis of the size and time taken also. Clear? So contracts are usually larger and take a longer time compared to the jobs. Clear? Contracts are basically usually larger and take a longer time basically compared to the job. Third one, in a contract, most of the costs are of direct nature, unlike in a job. Clear? So in a contract costing, we can say that most of the costs are of a direct nature, unlike in a job. Clear? So in a contract costing, basically most of the costs are of a direct nature, unlike in a job. Fourth one, in costing a contract, clear, in costing a contract, each contract it is to be treated as a cost unit, clear. So in costing a contract, each contract it is to be treated as a cost unit, while in job costing there can be more than one cost units. Okay, so in costing a contract, each contract basically it is to be treated as a cost unit, while in a job costing there can be more than one cost unit. Clear? There can be more than one cost unit. Okay, so these are some of the basic differences between the job and the contract costing. Clear? So you have to just remember that important features. So now next one basically which we have to discuss, that is what are the types of the contracts. Clear? So what are the types of the contracts? So here the contracts can be classified as under based on how the price of the contract it is to be agreed upon. Clear? So how much payment they have to be given. Clear? So that on the basis that there are different types of the contract. Clear? So contracts can be classified as under based on how the price of the contract it is to be agreed upon here. First one, that is the fixed price. Under this type of contracts, the price it is not dependent on any factor like materials, labor, time, etc. But it is a fixed total amount. Clear? So under the fixed price, that is under this type of contract, the price basically it is not dependent on any factor like material, labor, time, etc. Clear? But they will agree that they will give you a fixed amount basically for that specific work. Clear? So that is the fixed price contract. Clear? So the contractor it is paid a fixed total amount basically for executing the contract. Clear? So that is comes under the fixed price here. That is the contractor is paid a fixed total amount for executing the contract here. Clear? Basically for executing the contract here, the contractor is paid a fixed total amount. Second one, that is the cost plus. So under this type of contract, clear? So under this type of contract, the contract price basically it is based on the cost actually incurred plus a percentage of profit or the fixed profit here. Okay. So under the cost plus, what is that? Under this type of contract, the contract price, it is based on the cost actually incurred plus a percentage profit or the fixed profit here. So this is used basically in those types of the contracts whose exact cost cannot be correctly estimated at the time of starting a work. Clear? So cost plus basically where it is to be utilized, that is where we are not able to analyze the exact cost of the work. So in this type of the contracts, the customer may use the services of an auditor to examine the contractor's contract cost and may not. swallow some of them, clear, and may not swallow some of them. Okay, so in this type of contract, basically the customer may use the services of an auditor to examine the contractor's contract cost, clear, may use the services of an auditor to examine the contractor's contract cost, clear. So that is the cost plus, clear. Under that, cost actually incurred plus percentage profit or fixed profit. Depend upon case to case here. Okay, so fixed price we have covered, cost plus we have covered. Next one, that is time and material. Clear. Third one which we have to cover here, that is the time and material. So this is similar to the cost plus arrangement. So this is similar to the cost plus arrangement, except that the contractor includes a profit. Clear. Except that the contractor basically here includes the profit in its billings rather than giving a specific profit. Clear. So basically in that, this is similar to the cost plus arrangement. Basically in that, they have taken a fixed profit or the percentage profit. Clear. So here that is, except that the contractor includes a profit here that is into its billing rather than being given a specific profit. So in this arrangement also, the customer may verify all the cost in detail. Clear. So in this arrangement also, basically, because they will get the proper bill also. Clear. So they have the, so they can verify all the cost in detail basically in this type of the billing here. Okay. So in this arrangement also, basically the customer may verify all the cost in detail here. So that is the time and material. Clear. So that is the time and material. Now move to the further. Progress payments and the retention money. Clear. So what is the meaning of the progress payments and what is the meaning of the retention money here? Clear. Progress payments here, what is the meaning that as the work is to be going on, clear, as the work is to be going on, so they are going to pay some amount to them. Clear. So they are going to pay some amount to them as the work is processing on. Clear. And some amount they will left in their hand, that is to be known as the retention money. Okay. So when a contractor undertakes to execute a large contract for a customer, so the two parties agree on the terms of reimbursement to the contractor. Clear. So when a contractor undertakes to execute a large contract for a customer, the two parties agree on the terms of reimbursement to the contractor. Reimbursement, that is payment to the contractor. So as a contract involves considerable period of time, larger amount of contractors' working capital may get stuck up if there is no periodic payment by the customer. Clear. So that is basically it will take a long time and a long amount or larger amount of capital basically it is involved. Clear. So as a contract involves considerable period of time, larger amount of contractors working capital basically may get stuck up here if there is no periodic payment by the customer. Clear. If there is no periodic payment basically by the customer. So thus it is always suggested. Clear. So here that is, thus it is always suggested to have a system of progress payments. So normally this progressive payment, it is based at least in part on the cost incurred by the contractor in execution of the contract. Clear. That is how much they are performing the work or basically doing the work. On the basis of that payment, it is to be paid here. Clear. So normally this progressive payment basically is based at least in part on the cost incurred by the contractor in execution of the contract. So therefore the contractor must keep a track of the cost associated with the execution of that contract to justify its billing to the customer. Clear. So therefore the contractor basically must keep a track of the cost associated with the execution of that contract to justify its billing to the customer. So the progress billing, it is normally decided. Clear. So the progress billing basically it is normally decided by the experts such as architects, engineers, and surveyors, etc., who certify the stage of work completion. Clear. Who certify the stage of work completion. Clear. So how much payment is to be done here? Like basically, if you are working in the, like you are working in the banking sector, clear, or you are giving a housing loan to the customer. Clear. So after a specific work is to be done, clear, you will get a certificate. Clear. Basically, you will get a certificate basically from the professional. The customer basically will bring the certificate that this much work it has to be completed here. Clear. So now you can disperse the another part of the housing loan, clear. Like if the person taking a 50 lakh housing loan, clear, so they will not disburse all the housing loan in one shot, clear. That will be dispersed in parts, clear. So that will be dispersed in the parts here, clear. Similarly here they can say that, so the progress billing basically it is normally decided by the experts such as architects, engineers and surveyors, etc., who certify the stage of work completion. So based on this certificate, the proportionate billing it is to be done by the contractor, clear. So based on this certificate, the proportionate billing, clear. Based on this certificate, the proportionate billing basically it is to be done by the contractor here. Clear? That is to be done by the contractor here. Further, this is the progress payment. Next one, that is the retention money, clear. So next one, that is the retention money, clear. So what is that? Retention money basically it is normally an integral part of every contract, clear. So retention money, what is that? Basically, it is normally an integral part of every contract. So the customer keeps some amount of money out of the progressive bill payments basically with himself as a retention money or the security deposit to ensure that the work is carried out as per the plan agreed to in the contract and there are no defects in the end work, clear. So basically the here what they will do, that is the customer keeps some amount of money basically out of the progressive bill payments basically with himself as a retention money or security deposits to ensure that the work is carried out, clear. Basically to ensure that the work it is to be carried out as per the plan agreed to in the contract and that there are no defects in the end work, clear. Like basically if they are giving to 10 1 lakh, so 5 to 10,000 they will keep in their hands, clear. 5 to 10,000 they will keep in their hands and they will give at the end of the work, clear. So the amount is used to compensate the customer for any shortcomings in execution of the contract by the contractor, clear. So basically why they will keep this amount, that is if there is any work is not to be done, clear, like some part it is to be left clear or quality of the work it is not to be done, clear. So that is at that point this amount is to be used in the form of the compensate, clear. So this amount is used to compensate the customer for any shortcomings in execution of the contract by the contractor, clear. In execution of the contract by the contractor. So the retention money basically it is given back to the contractor by the customer after examining the quality of the work. Okay, so this retention money it is to given back, clear, to the contractor, clear. So the retention money basically it is given back to the contractor by the customer after examining the quality of the work after the contract it is fully executed or the work it is to be completed here. So retention money basically it is aimed at providing inspiration to the contractor to provide the quality work, clear. So why retention money? That is retention money basically it is aimed at providing inspiration to the contractor to provide the quality work here, clear, to provide the quality work here. Further, that is, there is also penalty cost in a few contracts which provide for payment by the contractor to the customer if he cannot complete the contract within the time stipulated in the contract. Where like sometimes basically you are also here that there is a 3-year project to complete the highway. Okay, so if the time taken by the team to complete that project, we can say that basically more than 3 years, clear. After considering all the conditions are going to be working properly, so in that case they have to pay to the penalty, clear. So there is also penalty clause in a few contracts which provides for payment by the contractor to the customer if he cannot complete the contract within the time frame basically stipulated in the contract, clear. So they have to pay the penalty, clear. That is contractor have to pay the penalty here. So next one, that is the escalation clause, clear. Escalation clause, clear. That is, what is that? Let's discuss here. So as a contract is spread over a long period of time, clear, that is it will take a long period of time. So the contractor runs the price risk of price escalation of the input cost, clear. So here the contractor basically runs the risk of price escalation of the input cost. So therefore an escalation clause it is normally included in the contracts to safeguard the contract against any likely changes in the price of a material or labor, clear. As we can say that it is a long-term contract, clear. So that during that time there will be lot of changes in the price will happen, clear. So therefore an escalation clause basically it is normally included in the contracts to safeguard the contractor against any likely changes in the price of the material and labor. So this clause provides that in case prices of the material, labor, etc., specified in the contract changes beyond a specified limit over the prices prevailing at the time of signing the contract. During the execution of the contract price basically will be suitably adjusted. Like you have done the contract at that time, just for example purpose, the cement. It is rupees, we can say that like there is a bag of cement of 10 kg, just we can consider that. It is of rupees 300. Now presently it is of rupees 500. Clear? So there will be a lot of changes will happen. Clear? So we have to be taken. Just for the example purpose, I will take this thing here. Clear? So that will be suitably adjusted. So to avoid any dispute regarding the amount of adjustment, the terms of the contract specify the methodology for calculating such adjustment. Clear? Like sometimes they will charge more or less. Clear? So proper way it is to be taken here. Clear? So to avoid any dispute regarding the amount of the adjustment, the terms of the contract here, the terms of the contract basically specify the methodology for calculating such adjustment it is to be utilized here. Clear? So this clause may be useful. Clear? Further that is this clause basically may be useful in safeguarding the interest of the customer. Also, like in the case of the declining in the price of material, labor, etc., which is highly unlikely in the presently inflationary environment. Clear? So not only what they are saying here, that is not only the prices basically will increase. Sometimes this leads to that there will be decrease in the prices of the products also. Clear? Sometimes basically what will happen, that is there will be decrease in the prices of the products also. Clear? So in that case, they have to be do the amount paid on the basis of that. Like basically they are doing the contract at this time, and later on the price will decrease to rupees 200 of bag, that is of 10 kg. Clear? So they have to do, just I will take one thing here. Clear? But they are saying that this will happen very rarely. Clear? As you will see that very rarely you will see that basically the prices of anything basically will decrease. Clear? But both the points will be taken care. Clear? But both the points is to be included here while doing the contract. Clear? While doing the contract. Okay. So that is the escalation clause. Okay. So in this session, we have to discuss up to this much point. In the next session, we will discuss some another points. Like first of all, we have to profit on the incomplete contracts. And after that, we will understand the example here, costing of work in progress and maintaining the contract account, and how we have to maintain the contract. Clear? All these things I will discuss in the next session along with some of the MCQs. Clear? Hope whatever we have discussed in our today's session, some basic points regarding the contract costing, it is clear to all of you. So thanks to all of you for joining this discussion, and do revise the topics regularly what we have covered till now. So thanks to all of you for joining this session.